existing home sales climbing in November from the previous month, but supply remains tight. And then there's interest rates. Diana Olick joins me now for a check on the health of the housing market. Diana.
Well, John, higher interest rates are starting to take their toll. Sales of existing homes in November rose just under 2%, but the street was expecting a bigger gain. These are counted by closings, so contracts signed in September and October. And take a look at what happened to mortgage rates. They rose pretty sharply, this on top of very low supply, which pushed the median price of a home sold in November to $353,900, up 13.9% from November of 2020. That annual price gain was actually slightly larger than October's increase. The gains had been coming down a bit from close to 20% earlier this year. I guess not so much anymore. The action, though, is still happening on the higher end of the market. Homes priced between $750,000 and $1 million rose 37% year over year, and those priced above $1 million up 50% year over year. Homes priced between $100,000 and $250,000, they fell 19%. That's because supply is so low on the low end. First-time buyers dropped to just 26% of the market from 32% a year ago. Historically, they should be about 40%. And it looks like sales may be slowing further. Mortgage applications to buy a home fell last week compared with the previous week, and they were down 9% from a year ago. Mortgage rates are expected to move even higher next year as the Fed stops pouring money into mortgage-backed bonds. The realtors today said they expect to see fewer home sales as a result next year, but not much easing on home prices due to that still very low supply. John?
Yeah, so Diana, does that tell us anything or suggest anything about price sensitivity heading into 22? I mean, we were just talking yesterday about that huge development in Phoenix and sort of what the outlook for things like that, projects like that are.
Well, you expect that prices would ease up a little bit as rates go up, because that's why prices rose so much in the past 2 years, because rates were sitting at record lows. But you still have that supply issue, such low supply and still very strong demand. And that's going to keep a floor under prices. They may ease up a bit just due to that affordability problem. And as interest rates rise, there's just going to be a wall of affordability. But I don't expect them to ease up that much. Again, it's all supply and demand.
Shepard Smith here. Thanks for watching CNBC on YouTube.